Dear students, welcome you all to the 22nd session of Personal Investment Management. So in this session, we are going to discuss various risks involved in the stock market investments. So before understanding various types of risk, let us understand what are the various types of risk. So basically, there are two types of risk. One is systematic risk and unsystematic risk. So in this session, we are going to discuss systematic risk in detail. Remember, systematic risk is also known as market risk. So let us discuss what is systematic risk. So definitely you should know that systematic risk is also known as market risk. So there is no, it's another word for the systematic risk. In a broader sense, let us understand the meaning of systematic risk. So it is a type of risk that affects the entire financial market or economy, not just a specific company or industry. So that is what the meaning of systematic. Systematic means it applies to the entire market. If it is a financial market, it applies to entire financial market. If it is economy, it affects entire economy. If it is entire state, it will affect entire state. So that is what systematic risk. So it will affect the entire financial market or economy. So uh, not just a specific company or industry. If it affects to only particular company or particular industry, then it is not a systematic risk because it is specific risk. So systematic risk will apply to everyone. Okay, whoever is the part of that economy or the financial market, to everyone it will apply. And another important thing is it cannot be diversified or it cannot be eliminated. So systematic risk cannot be eliminated. For example, if there is inflation, can you eliminate inflation? You have to definitely have to take the measures to control the inflation, but it cannot be eliminated by any stakeholders. It will be there. Okay, nor you can diversify this risk to another sector because all sectors are affected, right? So you cannot diversify the risk of systematic risk. So because it impacts the entire market. So what are the various causes for systematic risk or market risk? The first one is economic downturns. Definitely, when the economy goes down, it will affect the entire market and all the stakeholders in the market will be affected. And next one is interest rate changes. So RBI as a monetary regulator have to make the changes in the interest rate based on the inflation conditions and other conditions. So when the interest rates are changed, it will affect everyone and all the stakeholders who are part of the particular money market or maybe the stock market. Then inflation, definitely inflation is a major cause of systematic risk. I gave the example also. Inflation, okay, it arises due to so many other reasons, not only one reason. It arises because of so many reasons, and inflation definitely it will affect the entire economy. Okay, entire economy is affected because of the inflation. It's not it will not affect to a specific state or specific industry. It will affect all the states and all the industries. Geopolitical events, any political events, any changes in the politics, or any new law is implemented, or new government is formed, definitely it will affect all the stakeholders, all the companies, all the industries, all the states. Natural disasters. So when there is a natural disaster, definitely it will create confusion, chaos in the entire nation or entire sector or entire industry, right? So that's why it will affect everyone who are part of that particular industry or company or nation. So some examples we will see for systematic risk, and one of the best example is COVID pandemic. And COVID pandemic is the best example for systematic risk because the COVID has affected everyone. You just take the example of stock market, right? How the stock market was crashed. So to everyone it has affected. No one sector could be remain constant because of COVID pandemic. Even pharmaceutical sector was also collapsed. Okay, so everyone it has affected, and this is another important event. I think majority of the sectors were affected because of this. That is Adani Group stock crash due to some allegations of fraud. I think stock market also collapsed to some extent, and it has affected many industries and many sectors. That means it has affected everyone. So these are the examples for systematic risk or market risk. Let us understand various types of systematic risk. The first type of systematic risk is inflation risk. This is a major risk which is involved in the systematic risk. So what is inflation? Everybody knows. Let us understand what is inflation risk. So inflation risk is also called as, or also known as, purchasing power risk. So it refers to the chance that the cash flows from your investment will lose value in the future due to inflation. So that means even though you will get a return from the cash flows, because of the inflation factor, your returns will become equal. That means there is no return at all. And what happens? So because of the inflation, you will have a lesser purchasing power. You will not be able to purchase more. So as the time passes, you require more money, right? You require more money, and even though you have invested the money and you get the cash flows, because of the inflation factor, what happens is your returns becomes equal. Actually there is no return at all, but you should have more return, and automatically it will reduce your purchasing power. So that is the major type of risk. So as the prices rise, the value of your money decreases, which will reduce the real return on your investments. So when the inflation further rises, what happens? So your money value will decrease. That means you cannot buy more. So if you want to buy more, you should have more money. So what happens? So real return on your investment will reduce. So you will not get the real return because of the inflation. That means you should have more money to equal that inflation, and that will affect your investment. So that is first type of inflation risk. We can discuss through some examples. The sharp rise in the food and fuel prices in India during 2020 to 23 reduced the purchasing power of consumers and affected the investment returns. So because of rise in the fuel prices and also food prices, what happened? People did not buy more. Why people did not buy more? Because they didn't have more money. And that affected what? That affected the investment returns. How it affected the investment returns? Even though you had returns, cash flows, those cash flows become equal to the inflation. So you did not actually have more money at all. So that is one example. We can have another example, that is RBI's continuous rate hikes in response to the high inflation in 2023. What happened? It impacted the stock market growth. Stock market did not grow. Why? Because people did not have more money. So it impacted everyone. Everybody reduced their investment in the stock market. Stock market transaction got reduced, and that is the impact of inflation risk. The second type of systematic risk is interest rate risk. So when the interest rates are hiked, what happens? Again, the purchasing power will come down. So that is again another type of risk. So interest rate changes, what happens? It impacts the stocks, bonds, and other investments. So how it impacts? When interest rates rise, borrowing becomes expensive. People will not have more money with their hands. Okay, they will borrow less because they have to pay more interest, right? So what happens when they have less money? Okay, which will impact on the business growth as well as the stock prices. They will not have much money to invest. So what happens? So there will not be demand for the shares, and what happens? Okay, stock market, it will affect the stock market, stock prices, and also it will affect the business growth. Why? Because people will purchase less. So when the people purchase less, your sales becomes less, so it will affect the business growth. So there are some examples for interest rate risk. The first one is the RBI's interest rate hikes in 2020 to 23. So in 2020 to 23, because of the inflation factors, RBI has done major changes in the interest rates. So that led to a decline in the real estate and banking sector stocks. Why? Because people thought that, so interest rates are hiked. That means if we borrow the money, we have to pay a higher amount as interest to the banks. Okay, and what happen if the people do not have money with their hands? So automatically it will affect the real estate. Okay, people will not invest in constructing the new houses or buying the sites, etc. So that got affected. Real estate and banking sector got affected because of the interest rate risk. And second one is rising repo rate in 2023 made borrowing costlier, and which impacted auto and housing finance companies. So because of increase in the repo rate, what happened? So commercial banks have to pay more interest to the RBI. So they what happened, even if they borrowed, they have to increase the rate of interest. Okay, increase the rate of interest, and due to this, what happened? Auto and housing finance companies got affected. How they affected? Because they had to charge higher interest rate for their loans. So people did not take the loans. Okay, even if the loans were available, it was costly for them. So these sectors were affected because of rise in the repo rate in 2023. So the next risk is liquidity risk. So liquidity risk, another important systematic risk. So what is, how it affects? See, liquidity risk arises when an investment cannot be bought or sold quickly. Liquidity means what? You are able to convert your asset immediately into cash. If that does not happen, then definitely a liquidity risk will be created. So if an asset is not easily tradable, that means bought or sold, it has to be sold at a lower price, causing the losses. For example, I have a asset which is liquid, but I am not able to sell at the price which is which has to be sold. So what happens? Okay, I will incur the losses. So that will cause liquidity risk. So there are some examples for liquidity risk. The first example is regarding infrastructure leasing and financial services limited crisis, which happened in 2018. What happened? Okay, the very simple. So infrastructure leasing and financial services is a major infrastructure financial by infrastructure financing company. So they had given the finances, they had taken the loan, they had projects, and they could not sell those projects. And what happened? Because of not able to sell the projects, they could not repay the loans. And during that period, 2018, they had almost 91,000 crores, which impacted other financial services companies, especially NBFCs. So NBFCs had to face a lot of financial crisis during that time. So that means it affected the entire Indian financial markets only because of one particular major infrastructure financing company. There is another example. In 2023, several Indian startups struggled with liquidity due to reduced venture capital funding. So Indian startups had projects, but they were not able to implement the projects because of lack of venture capital funding. So venture capitalists did not turn up. So they had to face a lot of trouble in during 2023. So this is regarding liquidity risk. The next important risk is political and regulatory risk. So political and regulatory risk also affects the entire nation or entire sector or entire market. So how it affects, let's see. So government policies, trade restrictions, and sudden regulatory changes can influence market movements. So they will definitely affect the entire market. A sudden change in the policy, sudden implementation of some restrictions, and sudden regulatory changes or coming up with the new laws, for example Companies Act or some other acts. So that definitely it will influence the entire market movements. So if a country imposes new tax laws or changes financial regulation, it will definitely create a lot of losses to individuals as well as to the companies. So there are some examples regarding this. uh, the Indian government's 2022 decision to impose windfall taxes. So we should know what is windfall tax. Windfall tax means the excessive profits earned by oil companies because of external factors, maybe war or some changes in the policies of other governments, etc. Due to this, they will earn higher profits, excessive profits, rather than their business strategy. So what happens? Government will impose taxes on such excessive profits, and it happened in 2022 on oil companies. And what happened after implementation of this tax? It affected the stock prices of the entire oil companies. It crashed. It came down drastically, and that affected the entire stock market also. And we know this, right? The sudden ban on high value currency notes, demonetization in 2016, how it created okay confusions in the entire market, in the entire stock market. So stock market was uncertain because of the movement by the government. That was a good movement, but market will definitely, market is a sensitive, and market will take the any negative, some little negative news also, it will take to a higher extent and it will affect the entire market. And let's go to the next one, currency risk and exchange rate risk. So what is this currency risk? So currency risk refers to the potential loss caused by fluctuating foreign exchange rates. So definitely foreign exchange rates will be fluctuated over the time. Every day there will be fluctuations, and because of these fluctuations, okay, there will be a financial loss caused to individuals or companies, and that is called as currency risk or exchange rate risk. So investment in foreign stocks or bonds definitely will create, okay, either gains or losses due to changes in the currency values. So if there is a gain, definitely it is a profit. If there is a loss, okay, then definitely it's a major risk for individual or companies. So there are examples related to this. The depreciation of Indian rupee against the US dollar in 2022, and everybody knows, okay, about this incident, does increase the cost of imports and affected the companies reliant on foreign supplies. The continuous depreciation of Indian rupee against US dollar, what happened? Because it increased the cost of imports, and you know, major Indian companies import raw materials for preparation of finished goods or for many other purposes. So those companies which were dependent on foreign supplies, so what happened is those companies were got affected, and their stock prices came down, and the entire market got affected due to this particular risk. And so we have discussed all the five types of systematic risk or market risk in detail. So thank you for watching this video. uh, we'll continue with another video in the next session. Thank you.